there are reasons, valid reasons, why people might want to cancel a transaction.
It happens all the time. I saw a stat here, and nationally the number is 1 in 5 contracts make it to the finish line. So 4 out of the 5 are canceling for whatever reason.
Wow.
Whether it be price negotiations, appraisals, inspection.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
The first one is appraisal didn't come in. I mean,
this happens from time to time, especially in those moments of change in the marketplace,
right,
where you're going from balance to extreme seller market, these type of things. Whenever the market is sort of shifting direction, you run into appraisal challenges.
Yep.
Where the most common answer is, I agree to pay some imaginary number. Let's say it's $300,000. I agree to pay that for your house. The appraisal comes in at $280,000.
Right.
We have something to work out about. And so I'll throw it back to you to say, what happens in that circumstance? Is there something in your contract that forces something to be done?
Right. So we have 3 options. Number one, the buyer can agree to come up with a difference in cash. The buyer can cancel, or the seller can agree to lower their price to either the appraised value or somewhere between.
Right. And
then they both can agree that the buyer comes with some cash, but maybe not all the cash in the difference, and the seller might lower their price to accommodate that.
Yeah.
If there's no agreement is reached by the time that their appraisal contingency is up, the buyer could potentially lose their earnest money. So they want to get this negotiated within that time frame, whatever that time frame is. Usually that might be 18 or 20 days from acceptance. And so long as they negotiate a new deal with the seller and then sign an addendum to that deal, then the deal moves on. If not, if both parties cannot agree, in other words, the buyer does not come up in the amount of cash they can provide, or the seller doesn't reduce, or they don't meet in the middle somewhere, then the deal often will end up canceling. That's what happens.
And it's not a wrong answer. It's totally reasonable and appropriate if the house is not worth what you've agreed to buy it for. And it's fair to say an appraisal is just one person's opinion.
Yeah,
right?
That's the other thing that could happen. You could say, I want another appraisal. And in some cases you can get it. But the problem with that is that appraisers, they really don't like to be challenged.
And truthfully, they're using a ton of AI on this point now.
There is.
They're having these computer systems analyze the data to say, is this appraiser, human being, using the right comparables to compare the house? Yep. Are they making the proper amount of adjustments or normal amount for that marketplace? So the computers are validating, and it has to pass that test to say, is this appraiser likely in the ballpark, or are they not? That's part of the question. But it does come down to an opinion for somebody, and there's nothing in your contract that automatically says you must renegotiate, or you must cancel, or you must close. It doesn't say any of that.
Right.
If I'm within my clock, I can get out.
The ball's in the buyer's court here.
Yes.
The buyer has all the choices. The seller really has little choice in this, in the sense that they can say no, and then and the buyer can decide to stay or not. But the seller can't say, okay, you have to do this or that, or I want you to do this or that. It's always the buyer who makes the suggestions.
Sure.
Let's try this or that. The seller can counter it. They can say, okay, you want me to reduce my price to that? How about if I reduce my price to this, and you come up with a little more cash, and we kind of meet in the middle? That's something that can happen. But the buyers are the ones who are going to generate the change, and then the seller's going to have to agree to it.
Yeah, it's totally appropriate for me to have a house to come in. Let's say it come in a little lower, it's $10,000 low. For me to ask you as the seller to drop your price to match the appraisal. That happens all the time, right? Doesn't have to, but that's a normal thing.
And in a market like we're in now, that's where it's probably going to land, because buyers have a little more leverage now. They have a little bit going on their side. Sellers are agreeing to adjustments and contributing to the deal more, and so we're seeing it be. For the last 5, 6, 8 years,
super sellers market,
and now it's not so much.
Yeah,
and so now buyers do have that leverage.
I'm calling it balanced now.
I think so. I think it's leaning towards buyers. It's heading in the buyer's direction.
I argue, at least at this point, my mindset is I'm going to argue that you call it a buyer's market because it's so much less of a seller's market.
Right, you're right. You're absolutely right.
You're only used to seeing the seller have all the advantages.
That's true.
Lately, yes.
But that's the reality of what happens when appraisals come in. It's worth saying that the loan is not going to loan you based upon your contract if the appraisal's lower.
Right.
We're only secured by that one asset, that house, in a normal scenario.
Right.
And if it's worth lower, I can loan you less.
Right.
Is the answer.
Yeah.
So I can't loan you the dollars to make up the difference. It's going to come out of your pocket
Right.
or some renegotiation. Makes total sense.
And that's the thing, yeah. And when I talk about the buyer come up with additional cash, it's because the lender's only going to loan that percentage that the buyer has
Yes.
agreed to on the price. And if the price is lower, that's a smaller number because
Right.
it's the same percentage, it's a smaller number. If the buyer's coming in with 50% down, then it's likely that they're going to be able to pull this off irregardless.
Right.
Yeah, and that's really the key there is the point of you're not at the absolute maximum amount of financing allowed. You're
Right.
in this case, you're throwing out the example of 50%. There's tons of wiggle room in
Yeah,
there where you
right.
could borrow 60% or 70% of the property value frequently in these scenarios. It's very common. It's much less practicable if you're already at 93% of the property value
Right.
Yeah.
and you want to go higher than that. Well, that's less practical.
There's a problem there.
Yeah.
There is a problem there. Yeah, and just because you're putting 50% down an appraisal doesn't mean you have to do it. You can say, you know what? No,
Sure.
I'm not going to do
Right.
this.
Yeah.
I'm not happy that it didn't appraise, and the buyer's the one who has to agree to an additional appraisal. The seller can say, I want another appraisal.
Yeah.
Now, if the seller's willing to pay for it, maybe the buyer would say, go ahead, go for it. But the buyer might say, yeah, no, I don't care what the other
That's
appraisal comes in
a
at.
super touchy thing in my industry simply because we are so highly scrutinized to say you cannot shop for an appraised value.
Right.
I can't just get
Right.
a second appraisal or a second opinion
Yeah.
just because I want it. I'm not happy with the first one.
Right.
I have to have a genuine argument to say that first one was done improperly and,
Right.
and an error was made.
Yeah, and with FHA and VA, those appraisals stick
They
to
stick
the property.
well, the FHA specifically sticks to the property, call it 4 months, could
Right.
be as much as 6 months. VA sticks to the veteran and the property. It's the combination of those two things, which is slightly different. Yeah, it has a sort of scarlet letter on it.